Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Rocket Lab.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. I mean, for a company in a sector like aerospace, which is so capital intensive, Rocket Lab has, well, they've shown some really remarkable velocity lately.
And that Q3 2025 earnings release was the big headline, right?
Oh, absolutely. It was mainly driven by just a massive 48% year-over-year revenue increase.
48%. I mean, that's not just good. That's like accelerating market share capture.
Exactly. Especially when you put it up against the typical pace of other small and medium companies in this field. It really tells you their whole approach is working.
Dual approach, you mean? The launch services and the space systems.
Right. It's all clicking. And crucially, that growth wasn't, achieved by just burning cash inefficiently.
No, we saw that corresponding improvement in the gross margins, which was really encouraging.
And that's the key thing, isn't it? It suggests they're getting real operational leverage. As they spread their fixed costs over more launches, more satellites, the cost per unit drops.
Which points to a real path towards, sustained profitability down the line.
It does. But that great growth, it raises the big question, the central one for any of these growth stocks.
When does the profit actually follow?
Exactly. Because while the margins are getting better, they're not yet posting, consistent net profitability. Or, and this is critical, positive free cash flow.
So that's the tightrope for investors, balancing that huge potential against the current cash burn.
That's the core risk.
Yeah.
But the trajectory is, well, it's pointing in the right direction. You could see clear sequential improvements in Q3.
And management has been pretty clear, guiding towards positive free cash flow, by late 2026?
Potentially, yes. Now, that's not a guarantee, of course, but it gives everyone a tangible target to watch.
A target that I assume hinges almost entirely on one thing.
Accelerating the launch cadence.
Right. Especially as Electron keeps doing its thing and the Neutron program moves forward. But that acceleration takes capital. So what's to stop that 2026 guidance from slipping, 12 or 18 months? That happens all the time in aerospace.
And the answer is their financial foundation. They have a strong, positive net cash position on the balance sheet. They're not heavily leveraged.
So they have the liquidity. They can fund the R&D for Neutron. They can scale up production.
Without having to tap the markets every quarter or take on, crippling debt. In a sector where timelines are always shifting, that financial cushion, it just provides resilience. It makes that FCF timeline, even if it's ambitious, a lot more believable.
Okay, so the risk is there, but it's mitigated by a strong balance sheet. Let's connect that to their strategic advantage. I mean, the space industry is getting pretty crowded. Why Rocket Lab?
It really comes down to their competitive moat, and it's kind of multi-layered. First, they command the small and medium satellite launch niche.
Everyone's always talking about the heavy lift sector, but Rocket Lab has basically perfected this rapid, responsive model for the smaller stuff.
Exactly. Yeah. But the real differentiator, the thing that ties it all together, is the complete vertical integration.
They don't just sell you a ride on the rocket.
No, they sell you the whole mission. It's this end-to-end suite. Launch, satellite manufacturing, and then the mission operations. It gives them just unique control over the schedule, the quality, the cost.
Which, if you're a government client or a defense client, that kind of consistency and control over your own supply chain must be priceless.
It is. You contrast that with some of the legacy players who are relying on this whole web of third-party suppliers, right? That just introduces bottlenecks and cost overruns. Rocket Lab simplifies the whole process.
And that makes them a very sticky partner.
Incredibly sticky. And you can see that in their backlog. We're not talking about contracts for next month. We're talking about revenue visibility stretching way out into 2026.
And that's locked in with the heavy hitters like NASA and DARPA.
Right. And those civil and defense contracts, they're not just high revenue. They're usually higher margin, they're more predictable, and they're less vulnerable to the whims of the commercial market.
That said, we do have to talk about the 800-pound gorilla in the room.
The competitive landscape.
Exactly. While Rocket Lab owns its niche, they are ultimately competing against SpaceX, right? With Starship development and the Falcon 9's reliability.
That's the challenge. They have to show that their market is resilient enough and their niche distinct enough to handle that pressure from a giant like SpaceX.
Which brings us directly to the big future growth driver.
Neutron.
Right. Neutron is the whole thesis for scaling beyond what they do now, isn't it?
It is. The Electron rocket is great. It's profitable. It's efficient. but Neutron is designed to move them up into the medium lift category. We're talking payloads up to 13,000 kilograms.
So by getting into that market, they unlock this massive new addressable market, one that's dominated by bigger, slower, older companies.
It fundamentally changes their scale. It changes their revenue ceiling. It takes them from being a specialized small lift provider to a major player in space access.
And Neutron is designed to compete directly on cost and cadence, right? Fully reusable, first stage, quick turnarounds.
All of it. If they can execute on the vision for Neutron, they could capture a really significant chunk of that market from the less efficient providers.
We did see a bit of a development slip earlier this year, but it seems like the market has pretty much digested that news.
It has. The long-term story wasn't really altered, which is why the stock price has stayed constructive. The focus is now just on execution and hitting those next big milestones.
And that fundamental optimism, it's definitely showing up in the technicals.
Oh, for sure. The stock has had a very, very robust recovery after it bottomed out near that 52-week low of $14.71. That was a big test of conviction for investors.
And since then, it's been pretty much textbook bullish, hasn't it? It's consolidating now in that, 40 to 43 $3 range.
It is. And if you look at the charts since the summer, it's established this really clear pattern of higher lows.
Which is the classic signature of sustained accumulation, informed investors buying the dips.
So the immediate picture, from a technical standpoint, it really revolves around two key price points. You have this strong support level, both psychological and actual, sitting right there at $40.
And on the upside.
Significant resistance is clustered up near $45.
And what makes that $45 level so important?
Well, a decisive break above $45 on high volume, especially if it's driven by a real catalyst like an earnings beat or some good news on Neutron, that would signal a breakout.
And that could trigger the momentum traders to jump in.
It would. And it would likely push the stock into the next major price channel. You could be looking at a move toward the $50 to $60 region in the coming months.
And we can see that uptrend confirmed in the momentum indicators, too. The stock is consistently trading above both its 50-day and 200-day moving averages.
Which is just a clear signal that the intermediate and the long-term trends are aligned, and they're firmly bullish.
And what about something like the RSI?
The Relative Strength Index, yeah. It's sitting in that kind of ideal 60 to 68 range. It shows healthy buying interest, sustained momentum, but it's not flashing overbought yet.
Meaning there's still room for the price to run higher before you'd expect a sharp reversal.
Exactly. And you see the same thing with the MACD, showing upward crossovers, which reinforces that idea of accumulation, not heavy selling pressure. Fundamentally and technically, the stories are really aligning right now.
And that's all backed up by market sentiment, specifically from the people who are closest to the action.
You're talking about the insider buys.
Yeah, we've seen tangible evidence of recent insider purchases. Management has been buying shares in that $36 to $42 range.
Which is just a loud vote of confidence in their own outlook, isn't it? They're not just talking up the stock, they're putting their own money where their mouth is.
And then you have some structural factors coming up that could provide a big tailwind.
Like the ETF rebalancing. That's scheduled for November 20th. That's one to watch. If they get included or have their weighting increase in certain space or tech ETFs.
That could drive mandatory buying pressure.
It could. And there's also wide anticipation of more institutional buying coming in January.
Now, one thing we can't ignore here is the volatility.
Right. The company's beta is 2.17.
So for anyone listening who might not know that metric, it means the stock is expected to move more than twice as much as the broader market.
It's a double-edged sword. High risk, for sure, but historically, the stock has really amplified sector rallies. It's outperformed a lot of its peers when the space sector is moving up.
That volatility means that for tactical investors, identifying those near-term catalysts is absolutely essential. So what are the key milestones in the next, say, 0 to 3 months that could really move the stock and test that $45 resistance?
The first big one is the Q4 2025 earnings release. We expect that around February 2026. And given the momentum from Q3, the consensus is really for another year-over-year beat.
But the real market mover there isn't just the beat itself, it's the 2026 guidance, right?
Absolutely. If management comes out and provides an upward revision to their 2026 revenue and FCF outlook, that will trigger a significant re-rating of the stock. It just reduces the perceived risk in their execution.
And outside of the financials, what about Neutron?
That remains a critical catalyst. There's a major program update scheduled for the first quarter of 2026. This could be anything. completing a stage 1 structure, successful engine tests.
And any good news there, any acceleration gets reflected in the share price immediately.
Instantly.
Yeah.
Because it de-risks that long-term thesis. And then, of course, you have to watch the steady flow of contract news. Every new mission announcement just solidifies that revenue backlog.
Okay, so now let's turn to the market chatter, the more speculative, high upside stuff that's floating around.
Right, the unconfirmed rumors. But these are the things that could, completely transform the company's valuation if they pan out.
And the most compelling one seems to involve a potential strategic partnership or maybe a big manufacturing deal with one of the big LEO satellite constellation providers.
Yeah. If Rocket Lab were to secure a high-volume manufacturing contract for thousands of small satellites, that order flow would be transformative. It would instantly validate their entire space systems division.
Then separately, there's talk about a major defense award specifically for Neutron.
And winning a big multi-year military contract like that would be the ultimate validation for Neutron's reliability and its strategic importance. It would just lock in predictable, high-margin revenue for years to come.
And finally, there's that long-term rumor that always seems to resurface about them acquiring a complementary satellite manufacturer.
Right, which would allow them to vertically integrate even further, boost their internal capabilities, and just expand the scope of their end-to-end service.
And all of this is happening within this context of, well, really powerful macro tailwinds.
It is. The ongoing prioritization of space infrastructure, whether it's for defense, or climate monitoring, or connectivity, it's a priority for the U.S. and its allies. That ensures structural growth and funding are in place for the foreseeable future.
So it's not just about commercial success, it's also about strategic national capability.
Exactly. And that government focus provides a really robust floor for the entire sector.
So when you put all this evidence together, what does it mean for the person listening right now? It seems like it's a compelling opportunity for two different kinds of investors.
I think so. First, you have the tactical gains investor. They're looking to capitalize on what's happening in the next 3 months. They're positioning for that Q4 earnings beat, for those Neutron updates. They're trading the catalysts. Second, you have the long-term secular growth investor. This is the person who's looking for exposure to the multi-decade expansion of the commercial space sector. For them, Rocket Lab is an established leader, but it's poised to become a much bigger player with Neutron.
So, to sum it up, Rocket Lab's strong competitive position, that accelerating revenue, and a clear path of upcoming catalysts, especially around the Neutron vehicle, make this aerospace player one to watch very, very closely into the new year.
If you found this analysis useful, please make sure you subscribe, like, and share Smart Wealth with Joshua so you don't miss our next stock analysis.